What if I promised you a guaranteed way to find 100x cryptos to invest in? Pretty exciting, right? Well, I'd be lying if I said that. But what if I told you I've spent hours poring over coins that have 100x, searching for similarities, building a research report, hitting dead ends, and finally finding a token that just might blow up? That's more believable. And exactly what I did. So I started my searching, and right away, I was hit with a kind of surprise. See, 100x's in cryptos are talked about a lot, but aren't actually that common. Most of the coins that have truly increased that dramatically are coins you've likely heard of. Out of the top 15 coins by market cap, most have increased by 100-fold to their all-time highs, the only exception being AVAX and CRO. The FTT token did 102x, Cardano 179, XRP 1300, and then we get a bit crazy with Ethereum going up 11,000 times. Shiba increased 1 million-fold, and of course Bitcoin increased 22 million x. This blew my mind. That means $1 invested into Bitcoin in the beginning became worth 22 million at its peak. By the way, this entire research report will be available for members of Finova, formerly Patreon. On Finova, you'll find reports like this, live coaching every day, access to all of my investments in real time, and daily trade signals, all on a custom-built platform. Just make sure to grab your spot, linked in the description below. Now, the tokens that I mentioned are well known, but that wasn't always the case. These guys used to just be your average nerd. Now they're all nerds with $1 billion thanks to their projects. What made them do so darn well? What can an investor look out for? Because there will surely be new tokens added to the 100x club a year from now and new billionaires made. I began my digging. And the next surprising piece was the start date didn't seem to matter a whole lot. Like, sure, Bitcoin and Ethereum have been around a while, but Dogecoin came out in 2013. That 8,000x'd. Shiba came out in 2020. That million-x'd. BNB launched in 2020 and is now one of the largest coins in the world. XRP launched 8 years earlier and is half the size. This told me that a new project can do well very quickly. The next question is, what type of token does the best? DeFi, gaming, adults only tokens? Well, looking at these 15, they all essentially fall into 3 categories. Layer 1 and 2 coins, meaning they're blockchains where apps can be built on top. Exchange coins, meaning they have utility on a crypto exchange. And of course, you can't forget meme coins. Now, meme coins aside, these all have extremely high utility. They all serve a purpose and solve problems, and you'll see this come up time and time again. And this is when I ran into the next big twist: insider ownership. I was curious to see if these highly successful projects have equally large whales, and they do. The whale concentration of the 15 projects is quite high, from around 30% for Solana to as high as the mid-90% range for AVAX, CRO, and FTT. The only exceptions here are Cardano and Bitcoin. The big question is, why is this? And what impact does that have on the coin's price? First, it's important to note that exchange wallets are considered whale wallets as well, and this skews numbers a little bit higher. But another big piece comes down to VC funding. We can see, with the exception of Bitcoin and a few others, every other project on this list has this type of funding. What this means is large investors bought a big chunk of the total supply of the coin before it went public to your average investor. That chunk then turned into multi-billion-dollar holdings. Now, I was sitting here thinking of the secondary effects of this. Crypto investors generally aren't fans of VCs in projects. However, we have to recognize VC funding can actually push prices up in a few major ways. The first is credibility. Big investors attached to things means other investors will pile on. Not just retail investors, but other VCs will see, like, oh, hey, they've been successful in the past, let me invest as well. But also, the thing about these investors is they don't trade as much. They're more likely to hold on long term. So for example, if 50% of the token supply is being held long term by large investors, then there's simply less of that will be traded in the open market, which can push prices up higher if demand is consistent. And that 50% number isn't unheard of. Solana sold 50% of its supply to VCs for $370 million. AVAX 42% for $290 million. BNB 50% for $2 billion. Others have lower funding amounts and percentages sold. The memes in Bitcoin didn't dabble in pre-sales at all. Now, this has another interesting implication. It appears that the presence of VC funding increases the odds that a project does extremely well. However, it isn't all perfect, because the fact that there are VCs in the first place lowers the potential return for everyone else. Let me explain what I mean. If there's a token pre-sale, this means when the token is available to the general public, it will already have a market cap in the millions because people already bought these tokens, where a meme or Bitcoin's market cap essentially started at 0. This means multiples will always be lower for VC-backed projects. Put simply, it's easier to 100x something that has a $100 market cap than a $100 million market market cap. But on the flip side, there's also higher risk as well. There are far more failed meme coins than coins backed by VCs. What I'm saying is a VC-backed project will essentially never million X like Shiba, but there are more precautions built in as well, if you want to call them precautions. So we know the most successful projects have extremely high utility and tend to have VC funding whether we like it or not. And before we talk about a coin I have an eye on, we need to go a bit deeper into how these projects actually use their utility, because utility is just one part. You could have the best technology in the world, but if no one uses it, it's essentially worthless. All 100x cryptos have something in common, an extremely active user base. And that isn't just people following and engaging with the project on Reddit, which is a good sign in itself. It's more than that. You want to look for a project that people are actually exchanging value on. Are they sending money for payments? Are they using DeFi services? Are they exchanging NFTs through the network? Whatever that might be, you want to see activity on the network, and this all builds up and dramatically increases the odds that a project will actually be successful. As soon as people start using it, you see those prices increase. We need to think of crypto projects like regular businesses. If people use their services, it's worth something. PayPal would be worth very little if no one used it. Same goes for crypto. So what does the data say? Unsurprisingly, the projects that do the best have very active users. The active address ratio is the percent of users or addresses that use the chain in the last 24 hours. We can see all of these top chains are quite active, especially Solana and Litecoin. I found that among the top 15 crypto projects, the average daily active wallet addresses are 1.7%. If we're thinking of blockchains like businesses, then the average daily active wallets are like repeat customers. And we can go one step further and look at the number of daily transactions per active address as well. We can see Binance, Cardano, and Polkadot are quite popular in terms of transactions. When looking for the next 100x, I would highly recommend checking out those ratios. Average daily active addresses and transactions per active address. The higher the better on both. It means that people are using the projects and they're actually coming back to use it again. That's very important. If you're looking to find this data, it can be a lot of work. You don't even want to know how long this entire report took to make, but data can be found through on-chain block explorers or data aggregator sites like Masari. Now, which other things do 100x projects tend to have in common? We have some more obvious things like developer activity. One way to look at this is GitHub commits, essentially changes to program files. Here's the data from the 15 projects we've been discussing. It's just important to note that this data is not perfect because not all commits have equal importance. Some projects are insanely active like Cardano, others won't have meaningful data like Binance or Solana. What you really want to know is, are people actively working on this thing? For smaller projects, you'll likely need to go into their Telegram or Discord groups. There, you can actually talk to project representatives who can give you more context on what the team is actually up to. One of my favorite things to look for is a highly responsive team. In my opinion, the least you can do is respond to your investors, and I love when projects actually do that. But beyond this, there are a few nuanced things I noticed between these projects. First, their mission is generally clear and easy to understand. If a project can't articulate what it's actually attempting to do, they're going to lose investors. Look for well-defined goals in any of your investments. Second, they're attempting to solve big problems. The most money will always go to the projects that have the biggest ambitions and, of course, the team to back up those ambitions. And third, the community loves them. Cryptos need strong goodwill from the community to survive. None of these projects are yet producing enough value to justify them as value investments. They're all speculation to some degree, and because of that, you need a community that is willing to stick things out long term. Now, from here, I want to take these criteria and look at a project I suspect to be undervalued. Ergo. Starting off with the basics, there was no token allocation to VCs or insiders in the beginning. This is a layer 1 blockchain with a smart team, strong community, and good tech behind it, but they haven't been able to break into the mainstream just yet. In terms of active address ratio, Ergo is above average when compared to the top 15 cryptos we discussed, and this is despite having a far, far smaller market cap. And Ergo's number of transactions per active address is comparable to, but slightly lower than the average over the 15 largest crypto tokens. This is one of those projects who checks just about every box, except they just need a marketing push to really get things going and grow their user base even further. And the lack of VC funding, which is nice to see as an investor, is also a bit of a double-edged sword. On the one hand, the project is much more fair and decentralized, but on the other hand, they don't have the same amount of money that a VC-backed company gets to spend on things like marketing, which can slow growth like we're seeing. So in summary, when looking for the next 100x project, I highly recommend keeping an eye out for projects, ideally layer ones with huge goals and a team to back those goals, small cryptos that are getting attention from big investors, an extremely active user base who continues to use the platform, repeat customers, active developers who actually deliver on their promises, and a strong marketing presence with a core group of fans. Nothing is guaranteed in crypto, however, there are certain things that you can look out for to help increase your odds of success. I'd like to thank you so much for watching. I'm Max Maher, and I hope you have a profitable day.